I'm Dr. Boyce Watkins, and welcome to the Black Financial Channel. Some of you are watching me on Facebook as well. Hello to you guys also. I read some things about Netflix stock today that I thought I would report on really quickly for you to help you kind of see what's going on in the markets. If you follow the markets, you'll know that Netflix is kind of the talk of the town. The shares plunged more than 10% in after hours trading. The company lost 10% of its market value. I believe the Netflix market cap is about $158 billion. And you saw a price dip from a little bit less than a little bit more than 360, excuse me, about 362 at the close. And I see here that it dropped as low as 322, which is pretty big. That's a pretty massive decline. When I see things like that, I know that there's always some information that is driving that major price movement. Hello, Nakia. Hello, Shit Cherry. Hello, Jay. Hello, Rack on Rack. Good to see you. Okay, so let me give you some quick thoughts on this, and I'll read some of this article and kind of give you some perspective on some of this. I don't know if any of you guys are invested in Netflix stock, but the online streaming industry is one of the more interesting things to watch right now when it comes to investing, because you're seeing a lot of movement, a lot of change. A lot of players are entering into this industry. They're sort of, because they're looking at Netflix, and for the longest time, Netflix had a business model that was just out of control in terms of how amazing it was. I think they've reached 150 million subscribers, and I believe the subscribers are paying, maybe $11 a month or something like that on average. I don't know what the average subscriber pays, but you're talking about, $1.5 to $2 billion of monthly revenue just coming in just because. And what that did was that gave Netflix a huge advantage over all the other movie studios. I'll give you an example. I had a great conversation with Will Smith's brother, Harry, who's a financial guy like me. And I like Harry a lot. Whenever we talk, we have great conversations. And one of the things that Harry told me was that, or he insinuated, and I can't be telling all their business. I'm not trying. I hope he doesn't mind me sharing this. But when he and Will were, when the family was working on that movie Bright, I don't know if you guys saw the movie Bright on Netflix. A lot of studios bid on those films, and if I'm not mistaken, it was like everybody else was like, okay, we'll pay this much, we'll pay this much, we'll pay this much, and then Netflix is like, oh, we'll pay that much. Like, it was like the massive jump. Because Netflix could afford to monetize on a higher level than the other studios. Because a lot of the other studios, they make their money when they put a movie out, so the money's up and down. It's like, if you don't work, you don't eat. Whereas the subscription model says you eat even if you don't work, because you got subscribers, right? So anyway, Netflix, hold on. Sorry, guys, my allergies. So Netflix has really mastered that. Netflix has mastered the, make money no matter what model, which is quite extraordinary to watch. So anyway, let me read some of this article to you. Hey, David K, good to see you. Hey, Amp James, and hey, Itan Shakira. Oh gosh, I'm sorry, guys. My allergies are crazy. But on CNBC, they mentioned that the shares dropped more than 10%. After hours, they waited till the market closed to release their earnings reports. The big shock was mainly that not only did they not meet their expectation of subscriber growth. On Wall Street, growth is everything. Growth is what shapes your price. So they predicted something like 5 million or 5.5 million new subscribers, right, for this quarter. They came in like 2.7 million, which was far lower, about half of what they'd actually predicted. Even worse, I think they lost about 130,000 subscribers in the United States. So fewer people are subscribing to Netflix. People are just cutting the cord. And that surprises me because, I kind of thought the industry would go in a direction where people would just, subscribe to 4 or 5 different streaming services at once. And they would just maybe pay a total of maybe $30, $40 a month. And the reason I thought that was, and I still haven't given up on that prediction. I felt like that was reasonable because if you compare $40 a month to what people used to pay on their cable bills, you're still saving a lot of money. And what I noticed is that a lot of these services, their main move is they get a show that you love, a show that you have to see, and then they get you to subscribe to everything else by, pulling you in with the show that you love. So, for example, I subscribed to HBO only because I used to watch Game of Thrones. When Game of Thrones was over, I was like, why do I need HBO? I don't care. Netflix. On Netflix, I have a couple of shows. Like I watch Gotham and Gotham and Madam Secretary. I don't watch much else. Most people that watch these streaming services have one or two shows that they love, and they don't really watch a lot of the other stuff. Now, I don't know. You can tell me, how do you watch your Netflix? How do you, whatever you have, maybe you have Netflix, maybe you have Hulu or whatever. How do you decide what to watch? Because it's not possible to watch everything. It's just too much. If you are watching enough shows to cover the entire service, then you need to find something else to do with your time because you're watching too much TV. And so I sort of looked at my own life and I was thinking about every service I subscribe to. I subscribe to CBS, the streaming service, because I wanted to watch Twilight Zone. That the brother is doing Twilight Zone right now. Jordan Peele, best director in Hollywood. Love that guy. Love that guy. Love that guy. If you know him, tell him that that's my boy, and I would love for him to come on this podcast at some point because that brother is so talented. But long story short, Netflix is showing signs of kind of wavering, and a 10% drop in market value in a day is pretty huge. I don't know if they're going to recover from that, largely because their prediction for the next quarter, I think, is 7 million. I think they're predicting. Hey, babe, I'll be in 1 sec. Their prediction for the next quarter is that they're going to get 7 million new subscribers. And I'm sitting there thinking, if you couldn't even make 5 million that you predicted, what makes you think you're going to get 7 million? Are you going to increase your marketing? Do you have new shows coming in? What do you have that's leading you to even think that that's a reasonable prediction? So, according to Gene Munster, who is with Loop Ventures, he's a founding partner. He said that Netflix's second quarter disappointing results are a turning point for the company, saying that the best days for Netflix are behind it. The company reported growth of just 2.7 million global subscribers for the quarter, well below analyst estimates of more than 5 million, according to FactSet. The miss came both internationally and domestically, with the company losing more than 100,000 subscribers in the U.S. Quote, "This is negative, and I think we're going to look back at this quarter as one of the pivotal moments in Netflix history." So Netflix shares dropped more than 10%. The streaming video company reported 60 cents of earnings per share on revenue of 4.92 billion. So they made $5 billion in the quarter. Pretty good. The Wall Street expected earnings were 56 cents a share. So they actually seem to have met their that's kind of weird. 60 cents per share for 4.92 billion, but 56 cents per share for 4.93 billion. That doesn't even add up. But either way, they seem to meet their earnings expectation. Expectations are everything on Wall Street. It's not about how much money you're making. It's about how much money they thought you were going to make and how much you made relative to what they thought you were going to make. So that's just free game for those of you who want to understand, how the stock market works. Quote, "The key insight here is that the content lineup that they had in the June quarter simply did not get the job done. We can talk about what's coming in terms of competition, but ultimately that is the tip of the spear of this story." So they're saying it's not so much just that the new competition's coming, right? You've got You've got Disney, NBC Universal entering the game. You've got Apple coming into the game, Warner Media coming into the game. Not only are they competing for your customers, they're doing two other things that are going to hurt Netflix. One, they're charging a much lower price. Disney is coming in as a loss leader. They're literally coming in saying, "We're ready to die over this. We're ready to go ahead and bleed billions and billions of dollars just to establish market share." So Disney's coming in at, I think, $6.99 per month, which is about half, a little bit more than half of what you have to pay for a Netflix subscription. So that right there shows how serious they are. And then the second thing that's happening that hurts Netflix is that a lot of these new competitors used to provide content for Netflix. So Netflix has to both spend money to replace the content, and they've got to deal with more competition. So it's almost like your best friend that used to help you every day is now your worst enemy. So not only is he not helping you anymore, he's now trying to come at you, right? So you got, all these new dynamics that Netflix is going to have to deal with. They're going to survive. They're not going to disappear, but they're going to deal with some market realities that are going to be really tough to kind of confront. I'm still of the belief that the industry is growing. I think that there's money for everybody, but at the same time, stock prices tend to move based on expectations and what the money they thought you were going to make. They move based on growth. So let's say Netflix never made more than $5 billion a quarter. They're already making almost $20 billion a year. I mean, that's an insane amount of money. That's earnings. That's not revenue. Wait, sorry, that is revenue. Scratch that. So revenue is almost $5 billion every 3 months, right? So they're making about $18-19 billion a year in revenue. That's pretty damn good. But if they were to stay flat and never increase their revenue, then you would probably see the stock price plummet, because there is expected future growth implied in the price that the stock trades for right now. That's why the stock took off so much. If you look back at Netflix stock, say over the last 5 years, this is why I've been talking for years, telling you guys to invest. But Netflix stock, I mean, you could have bought it 5 years ago for about $63. Now it's worth over $362. So imagine buying a house for 60 grand and it's worth 360 grand 5 years later. Or if you went back to just to say 2012, Netflix stock was trading for under $10 per share. Actually, December 30th, 2011, at the end of 2011, it was trading for $10 a share. So if somebody had loaded up on Netflix stock, let's say they bought $1,000 worth of Netflix stock back in 2011, $1,000 worth of Netflix stock in 2011 would have given you about 100 shares. Today, 100 shares would be worth about $36,000. So $1,000 flips into 36,000. That's pretty good, pretty big, right? But of course, every investment doesn't turn into a Netflix. But the reason you invest and you diversify is because you want to be there for the ride when the next Netflix rises up. In fact, I don't know how tell your stories. Feel free to share. How investing has worked for you, if you've been making money, if it's going well for you. I'm willing to bet you that if you've been investing consistently for the last 2 or 3 years, you probably made a lot of money. There's a lot of money being made. In fact, I heard from 2 ladies 2 days in a row, independent of each other. Each of them, what they did was, which is something you may want to do with your kids, they had their kids go through an investor program. Now, it happened to be our program, but I'm not telling you to put your kids in our program unless you want to. The reward that each of the moms did was something that a lot of parents do. They told the children, if you complete the program, I'll give you, some money to invest. One mom gave her daughter $500. She turned that $500 into $4,300. I'm not kidding. The other mom gave her daughter $1,000. She turned that $1,000 into $8,000 and something dollars. In fact, the second mom is actually coming on drboycetv.com on Thursday. Her name is Constance Carter. That's her name. She runs the largest Black real estate brokerage firm in California, and she's going to come in. I met her at FraserNet. She's a real smart sister. So, get your kids started investing, because if they do happen to make some good moves and they see that money coming in, they're going to want to keep doing it. They're going to love it. They're going to be excited about it. And then at that point, you don't have to tell them to value their wealth or to want to learn about economics. They're going to want to learn it on their own. You're going to catch them reading books on their own without you even saying anything. So anyway, I'm going to go. If you still haven't learned how to buy your first share of stock, our Black Millionaire Project is basically one where we want to get 1 million Black people invested in the stock market. So we're offering a free training on how to buy your first share of stock. If you'd like to take a look, just go sign up at blackmoney100.com. That's blackmoney100.com. And you can learn to buy your first share of stock. It'll take just a few minutes of the training. It won't take you long. It's a great video. You'll love it. Also, if you live in Chicago, I will be doing an investing seminar in Chicago. You can go on July 28th. You can go to drboycechicago.com. The next month is Los Angeles. That's drboycelosangeles.com. So feel free to check those out. And that's pretty much it. Some of you asked about the kids program. The kids program is at blackmillionairesoftomorrow.com. That's blackmillionairesoftomorrow.com. We give our kids, education like they're college students. So it's kind of a Black business school for children, and you're going to love it. And if you don't like it, you get your, there's a money back guarantee, but you're not going to want that, because your kids you're going to see the transformation that I'm talking about. So feel free to go check it out. Okay, thank you for Nakia for the testimony. She says, I have the Be My program for my goddaughter and 2 of the workbooks. Phenomenal. Good. And if you have a positive experience, we'd appreciate if you would share that with other people, because we really want people to consider sending their children to business school early. We send our kids to football camp. We send them to basketball camp. We send them to baseball camp. I think we should send our children to economics camp, to powernomics camp, to black business camp, black wealth camp. That's what's going to get them ahead in the next generation, not just playing sports. So feel free to go take a look, blackmillionairesoftomorrow.com. That's our digital program, and also the workbooks. If you want to check out our workbook bundles, we have these workbooks we invented for kids as well, with flashcards, things like that. You can go to financialworkbooks.com. That's financialworkbooks.com. Okay, I'm going to go. She just came home, so I'm going to go spend time with that amazing black woman in the other room. So I hope that this was helpful to you guys, and I shall see you soon. Take care. Bye-bye.